you know, we largely had to be on the other side of major moves. So if a stock was going down, we had to be accumulators of it. If a stock was going up hard, we had to actually be sellers, short sellers of it. Like, our fiduciary responsibility was to add liquidity to the other side of drives. And that's what makes the argument on the side of market makers and stuff, is that we provide liquidity for the markets. We make markets more efficient. That's not entirely true. That's a self-serving statement in a way, but there are some elements of truth to that statement, because in order to, your stock is collapsing and you want to get out, you're going to sell to someone. Usually that's a market maker you're selling to. So if that market maker weren't there, then there might not be no one else willing to step up to the plate there. But now, the other thing that I was mentioning here, thanks, Tom. The other thing that I was mentioning earlier this morning to the traders is that you got to know your stock's range. So like NVIDIA, this is almost $212 at the high, and let's call it $211.50. It's a little higher than that, but let's round it up. So 211.50, and here's 200.50 at the low, right? So this is crazy, you know? You got $11 move. You've got $11 move, which is way outside of the stock's volatility range. You've got double deep from the origin of the drop, right? And the RBI has, the GBI has become the middle. I just put all of that together. And so it's these moves here that was really where the vast majority of the work was. And, the size of these moves make these moves look small, but these are huge moves off the low from here to here. That's $4. That's a $4 move. Now from here, where I played to here, that's a $3 move. So here's $4 off the low, and here's $3 off the low. $7 in total. It's crazy. $7. So it took time, which is why I told my guys, listen, I'm probably going to be a little late. I got to work out of this trade. This is the time largely that the trade took, the vast majority of the trade took. I didn't consider shorting at the GBI. Good question, though. Jim is saying, did I consider shorting at the GBI? And I'll tell you, well, look, I wouldn't short at that GBI just because of how far I'm already down. And so this is where odds come in. Clearly, that would have been a monster short. But that's going to work maybe 2 times out of every 10 times I try to short a GBI after a $6 move. Like, that's crazy. Like, the best GBIs are in the beginning of the move. You understand? Now, I didn't actually think there were great odds of this GBI becoming halfway because of how far down we were already. I just said, if this ever happens to make that GBI the 50% mark, oh my God, this is going to be a monster play. But I didn't think that was going to happen though, because that would mean many, many points down more. And I'm like, the odds are low, but if it does, that's where this thing is likely to turn big. Good question. Yeah. Yes, the day after NVIDIA announced earnings. So it was crazy because it started off strong this morning, and then we saw it like, boom, JR played it. JR caught this short on the downside, which was pretty amazing. JR caught that move to the downside up there off the double tails. You see? But I caught the bounce back up. And then the monster turn. Here, both legs of the monster turn. Leg one, leg two. At this point, you got to look at the stock. Look at this thing. At this point, you got to look at the stock like it's brand new. Like this doesn't even exist anymore. Once the turn happens, you can't. It's like, look, this doesn't exist anymore. This is like, now you got the open again. Really. That's like the open. And so, you know, you got to look at these moves like this. I find that halfway mark. We hold, we clear some red out here. Pause. Yeah. Mm-hmm. Would a short be at 209.75? Yes. Yes. So, yes, Naira. Now, I was talking to you guys, Naira, when this was going on, but it would have been very nice to grab, very nice to get out of this long and flip it back short. This move off the low is not, the odds are not good for it going much higher. So take the whole drop, right? And there you are, pretty much right in that halfway zone again. You want that short. Now, the only caveat is that if I got short this, I would be coming out in the range of this bar. So it's still a nice, nearly $2 move, but I wouldn't be going for the new low because this bar up was so powerful, but little did we know, it just kept going. But that's not normal. That's just because this thing is acting off earnings now, but that's not normal. Green bar, boom, whoa, uh-oh, uh-oh. Now this is an exhaustion bar here. Or it's getting close. Maybe not quite exhaustion, but it's getting close. There we go, right there. That's my first sign. And so from here, I'm actually willing to play it lower. Now for me, the lower it gets, the more juicy it gets. You know, boom, there's more. And then, as you recall, I hit up. This stock moved right into my orders right above 201. Then it moved back up, and I'm like, it may not come back in, so I'm going to hit it up against above this bottoming tail bar, but I'm going to leave my orders down here. This tail bar gets me more. Well, it wasn't a tail, drops into my orders, then moves back up, forming another tail. I buy above that tail, and the last hit here on this run, I buy above the red bar. Boom. Play 2. The 50% level holds. Looking for red to be eliminated. Boom. Here. Crazy. It's kind of trying to put you into my footsteps there. Yeah. But it's not often when I'm able to take a longer play like that and just every step of the way kind of walk my traders through it, what I'm thinking, what's happening next, what's the next move, while it's happening. So I think the traders enjoyed that this morning. You guys enjoyed that this morning who were with me doing this? Did you enjoy that? All right, cool.